My favorite part of the show, Money, Power, Politics. And today, the markets collectively closed up, nearly hitting a new record high. That is despite a very aggressive trade war, Middle East escalation, and of course, AI competition overseas. In fact, the thing making investors the most nervous is much closer to home. An executive told one of my next guests that Wall Street is clearly less concerned with the war in the Middle East than local politics. Quote, more people are focused on the New York mayor's race. That is the surprising win by Zohran Mamdani, a Democratic socialist, over former Governor Andrew Cuomo. The author of that report, Bill Cohen, is here. He's a former Wall Street banker turned journalist and founding partner of Puck and CNBC senior analyst Ron Insana joining us. Bill, walk us through how business leaders are reacting to this race, because the funny thing is, as much as my sources, yours, are all freaking out, I bet your bottom dollar, scores of them didn't bring their booties back from the Hamptons and even vote.
Well, Stephanie, I got to agree with you. I think they both protest too much, as usual. Through thick and thin, these Wall Street business executives always figure out a way to make money, and plenty of it. But I have to say, normally I don't get a lot of unity from the people I talk to on Wall Street, especially with the actions of this administration. But in the last few days, I've gotten sort of a unified response on the bombing of Iran, of the nuclear facilities in Iran, and a unified response on their concern about Zohran. So I don't know what that tells you. As I say, I think they're overly sensitive on the New York City mayoral race. I think they're complaining too much. But, this might be the moment that gets our friend Bill Ackman into New York City politics, electoral politics, for the first time, Stephanie.
It seems like there's nothing in the public eye that Bill doesn't want to get himself involved in. Republicans, though, are trying to make Mamdani now the face of the Democratic Party. This is like a marketing win for them, so they can paint them broadly as far-left socialists. Is this their tried and true tactic? It was not that long ago that they made Joe Biden the socialist boogeyman. Ron?
Yeah, well, we had Bill de Blasio in New York as well, who was a self-avowed socialist, and somehow New York managed to survive that experience and still come out stronger at the end. I think no one's looking at Mikey Sherrill, who's running for governor here as a Democrat in the state of New Jersey, our home state, Steph, and who may very well be the future face of the Democratic Party more than the mayor of New York, and possibly even with greater ambition. And so I think, a lot can be made of this thing. And we're not even sure he's going to end up mayor of New York City. Mayor Adams may still have a chance to slide through in a 3 or maybe even 4-way race and retain his position. So I think, the jury's still out, and Republicans can make as much as they want out of this particular event. But this was a primary, not a final decision. So we have yet to see.
All right, let's actually talk about what is going on Wall Street, because it was another huge day. Walk us through, Ron, why markets are so excited, because I just laid out all of these risks that we're still facing, but markets still came to be trucking on.
Yeah, I think everybody's beginning to price in, and we've heard this from at least 2 different Federal Reserve officials, although not the chairman of the Fed himself, Jay Powell, that we could see interest rates cut as early as July next month. And if the data continue to support lower inflation, and maybe some slower economic growth and less employment than Wall Street is looking for, or even the economists broadly speaking are looking for, then there's justification for lower rates. The dollar fell. That could be a propellant because multinational corporations are more richly valued. As the dollar goes down, it makes their products overseas less expensive. And so there were some other factors, along with energy prices being elevated and oil stocks doing better, that pushed the market higher today. And then NVIDIA, which is the darling of Wall Street, hit a new all-time high. It's now the most valuable company, surpassing Microsoft. So tech is back in gear, if you will, or in fashion, and that too helped to drive the market higher today.
But couldn't it also be, Bill, because Trump is serving up tacos yet again? Trump always chickens out. The White House is now saying that the president's July 9th deadline, right? That was the deadline when if all of these countries didn't get their new trade deals done, we were going to kick in these big tariffs. Now the White House is saying this deadline is not critical. I mean, are you kidding me? Remember when this was front and center and exactly what the president was going to do? Now that date is coming and maybe it's not that important.
Well, Stephanie, in addition to all the points that Ron made, the very good points that he made about why the market might be hitting all-time highs right now, I think a key one is just this horrible agenda item that Trump focused on in the first few months of tariffs seems to have receded into the background. And with this report today that the July 9th date is going to be sliding, I mean, this is becoming like the TikTok of our economy, where even though there's a law that says that TikTok has to be sold off by date certain, Trump keeps avoiding the law, ignoring the law, and keeps allowing the TikTok deadline to slide. I think the reason the markets are doing better is because people are, or Trump is just receding from this stupid, ridiculous idea that we've talked about so many times about how ridiculous these tariffs are, which are a tax on American consumers. He seems to be dropping them from his agenda for the moment. And, he's got other things that are top of mind. And when they come back, unfortunately, because they will, it's like a bad penny, I think the markets will, erupt again. And then, that's just the way it is with this administration.
And for those of you at home who are wondering, why does this TikTok thing keep getting pushed off, and you're wondering why? Well, take a close look at who actually owns TikTok, what U.S. hedge funds are huge investors in it, and then take a look and see where those investors are related to Donald Trump's crypto business, his crypto platform, and see if they're invested there. And that's going to start answering that question for you. But the president actually talked about that phantom tariff revenue in relation to the budget bill making its way through Congress today, and I want to share a bit of it.
I got a call the other day from the people in Congress because we're doing our bill. I didn't even tell you this, Mike, and they called. They said, there's something wrong with the numbers, sir. I said, what's wrong? I don't know. They're not balancing out. I said, what's the problem? We're taking in much more money than we have scheduled. I said, so far, that sounds good. They said, how much is it? About $80 billion. I said, do me a favor, check the tariff line. They called me back an hour later. Sir, we've taken in $88 billion in tariffs.
$88 billion. Well, here's the thing. That sounds big. And I'll tell you, according to the latest Treasury data, that number is actually bigger. It's almost $96 billion. Bravo. But here's the problem. The income tax brought in $1.82 trillion in 2025. That made up 52% of government revenue. Tariffs account for just 4 or 5%. So let's actually talk math, Ron.
Yeah, well, the math is not mathing. And no matter what you say about tariff income, it's still widely expected by the Congressional Budget Office, which you referred to in the prior segment, and other analysts of this particular budget bill that's making its way through Congress. That bill is going to add, at a minimum, $3.4 trillion to the national debt over 10 years. It assumes 1.8% annual growth, which, again, as David Stockman and the Reagan administration many, many years ago described as a potential rosy scenario. We have these numbers that are just, made from whole cloth. And yes, there may be some additional incremental tariff revenue that is coming in, but it's not going to offset the expense of extending the tax cuts, possibly in perpetuity, and or adding to them in a certain way, shape, or form, whether it's not taxing Social Security or not taxing tips and so on and so forth, and increasing spending at the same time. So that incremental increase that we're getting in tariffs is not going to make a dent in annual deficits or the size of the national debt over the course of the next 10 years.
All right, gentlemen, I'm not done with either of you. We have to take a quick commercial break, but we've got more to cover when we return. Peter